Hello everyone, welcome to the Bowtie Breakdown. I'm Garry Morin The BowTieGuy, and I am on the road again here in Pawtucket, Rhode Island. I'm with my friend Joe Baptista, owner of Anchor Financial. Thanks for joining us, Joe.
Thank you for having me, Garry.
No problem. Thank you for letting us bring all our equipment in and kind of do this in the middle of your office in the middle of a business day, so we appreciate that.
Yeah, happy to have you here. And I love that bro type.
Oh yeah, Anchor Financial.
That's a good one.
So Joe is joining us today. He's going to tell us about one of the really cool loans that are out there called a 203K Rehab loan. So Joe, can you kind of fill us in on like what does that entail and what is it all about?
Absolutely. So what we're seeing now is that, there's limited inventory out there. There's not as many houses for sale, unfortunately.
Yeah, we're kind of hovering around between the 1,100 and 1,300 mark.
It's crazy.
For like the last couple of years. It's crazy.
It's crazy, right? In a normal market, you're probably like 3,000
3 to 5,000
right?
usually. Gives you an idea of the inventory level.
So low inventory. In what we've seen, and I'm sure you've seen it too, is that a lot of the houses that are out there need work.
Yes.
A lot of distressed properties.
Especially, I want to say, in the lower price range houses, we'll kind of call it that.
Yeah, and a lot of the first-time home buyers, and entry-level buyers, they can't afford these $400,000 houses with these prices that are kind of gone too crazy. So, the rehab loan has become, a very, very prevalent thing right now.
Yep.
So a couple different ways that you can do a rehab loan. The most popular is with the 203K, what you mentioned. It's a FHA loan, Federal Housing Authority loan. And basically what they do is they give you the money to purchase the house and the money to do the repairs on the house.
Very cool.
All right.
Very cool.
Very, very cool. The work has to be done by a state licensed and insured contractor.
So you can't have Uncle Joe, who's been a carpenter for 10 years, do it.
Now, if Uncle Joe works for the contractor that's doing the work,
that's a different story.
That's a different story. But Uncle Joe himself, not necessarily.
You can't get the money for your uncle or family member.
You can't, the family member. So so work's got to be done by a state licensed and insured contractor. The scope of work is really unlimited.
Okay.
Scope of work is unlimited.
You beat me to my question. I'm going to ask you what the limitations are.
There's a couple different ways you can do these, right? So the easiest one to do is what we call a streamlined 203K, where you need less than $35,000 worth of work.
Okay.
So less than $35,000 worth of improvements. And all the work would be done by one contractor.
Okay. So
you can't have multiple contractors in the streamlined 203K situation, and nothing structural. You can't move walls. You can't. It's got to be mostly cosmetic. I mean, you can redo a kitchen if the kitchen's there.
As you're not knocking a wall down.
Right. So up to $35,000. A little bit easier of a process where you don't have to have what's called a HUD consultant. So the HUD consultant, what is that?
Sounds important.
Sounds important. Sounds expensive.
Sounds expensive.
But so HUD consultant comes into the picture when you have the scope of work that's like a major scope of work. Like right now, we have a 3-family.
Like if you're gutting it down.
If you're gutting it down, right? So we have a 3-family we're doing right now, man. Let me tell you, this thing looks like it's gutted completely. I mean, it's to the studs.
Yep. You just heard Joe say that it's stripped down to the studs, so they're doing a serious remodel.
This is a serious rehab. What happened was the seller of the house, or the current owner of the home, was rehabbing it, ran out of money. So, distressed situation. They had listed it for like $275.
Yep.
Our borrowers got it for $225.
Wow.
But we're talking $175,000 worth of work.
Yeah.
Almost two, and with
almost the price of the property.
Almost the price of the house.
Yep.
I mean, it's a $200,000. It's going to be $200,000 by the time it's said and done.
But it gives you the idea of the scope of how big you can go.
How big you can go. So it's kind of unlimited, and we're doing appliances, everything. I mean, this is when this thing is done, it's going to be brand new, all new, and it probably worth $500,000.
Wow.
Probably worth $500,000.
And got it for $225.
Got it for $225.
And then the
$175. They're going to be probably somewhere around $425, $400 when they're said and done.
Wow.
But it's going to be brand new.
Yeah, everything brand new.
Brand new heating systems.
Everything.
Everything.
Top to bottom, inside out.
Unbelievable.
Wow, that is awesome.
It is pretty cool.
So how does that work? Now you're saying there's 2 different parts. There's the buying the house, and then there's the repairs. Are there 2 separate loans?
Good question, right? So one loan, and what happens is you have to get all of the contractor estimates, all of the numbers in place before we close.
Okay.
So, because none of the work happens until we close. Once we close, once you own the property, that's when the work begins.
That's where I spend the time with my buyers, going to meet contractors, getting all the prices and estimates and all of that.
Pain in the neck for realtors because there's a lot of going back to the property, a lot of meeting the contractors, a lot of that stuff.
And then the contractors, now, do they have to be approved contractors? Do they have to fill out paperwork?
There's a ton of paperwork for the contractors. So
that's usually what I run into.
I'll tell you, it's got to be good point. So the hardest part, I always say, the hardest part of these 203Ks is finding a good state licensed and insured contractor
That's going to call you back.
That's going to call you back, number one, and that doesn't mind doing paperwork.
Yep.
You got to do some paperwork
Yep.
with these
A lot of
things.
these guys do not like to touch paperwork.
They don't, and let me tell you, if they're going to be trying to give you the estimates on the back of a napkin or something,
Yeah,
we're going
it's
to have a really bad process. It's not going to go well. So I always warn people of that. I've been fortunate to meet a few contractors along the way, but these guys are busy. The good guys are busy. 203Ks, great option. The value, so to talk about over improvements and stuff, because it's like, well, how could these people spend $200,000?
What can they do? Is there limitations to what they can buy? I know you mentioned they were buying appliances, but can I put an in-ground pool and a jacuzzi in my house?
As long as the value will support it.
Oh,
so there's going to be two values that, in the tricky part of besides having a good contractor, of the 203K is you have to get the underwriter, the appraiser, the contractor, and you, the homeowner, all agree.
Everybody has to be on the same page.
Everybody's gonna be on the same page. So sometimes, and also the 203K consultant too, the HUD consultant too. So there's a fifth one. Right? Oh wow! So because the HUD consultant, the contractor can be like, well, we don't need to do this. It's okay. But the HUD consultant will be like, no, this is a safety thing. You have to do this. And then you never know when it gets to the underwriter's desk. The underwriter can, and that's kind of the final stop. The underwriter can be like, well, guys, you did all this, but I saw in the picture of the appraisal this over here. Oh, you gotta go back and do this. So that's what we're working on in this transaction right now, is the back and forth between the appraiser and this and that.
So that brings up another interesting point that I run into sometimes when I had a buyer with a 203K loan. FHA issues that come up on the property versus what they want to do to the property. Is there a limit, or like how does the FHA stuff have to be put on the estimates prior to any of the improvements they want?
In the end, the house has to meet minimum HUD standards. So, and that's where you get a lot of this back and forth, because, like, if they're missing a stupid handrail or something like that.
That's more important than your granite counter.
It is. So
it sounds funny, but in the grand scheme, it really is.
With FHA, it's all about safety stuff. They want to make sure that, no missing handrails. If the house was built before 1978, there's no lead paint, right? So, and these are things for you as a homeowner that you want to be,
right?
You want,
especially with children.
Yeah, especially with children and things. Yeah.
Elderly folks.
You would never imagine the challenges that happen when people don't even think, lead paint's not a big deal, and the next thing you know, you have a poor child that got infected. So so it's important stuff. So
is there a minimum credit score for these type of loans?
Good question. So they're FHA loans. So with us, FHA, we can go down to 500 credit score.
Oh wow!
The lenders that are doing so with COVID, a lot of lenders pull back from doing the 203Ks. But we have a couple really good lenders. So that's the benefit of us being brokers, is that we work with a multitude of different banks. I mean, I probably got 30 different banks.
Oh, okay, that's good.
So hey, when Bank A doesn't do it, I go to Bank B, C, D, E, F, G. That's they can do it.
That's a nice option.
It is. No, it's anything in life is all about options. Right? The more options you got, the better you're going to be. But they've pulled back with the credit scores a little bit. So now, like 580 minimum.
Okay.
Really 580 minimum. But if you got a 580, it's going to be a crappy rate. So I'm going to coach you up, though. If you got a 580, I'm going to get your score up.
Exactly.
Yeah, we're going to get your score up. But to answer your question, though, you can be in the high 500s and still be able to do this. You'd have to put down payment down.
Yeah.
You wouldn't be able to get down payment assistance with that.
Preferably, they would... Best case scenario would be kind of like the same scenario, like the 620 to 640 would be a better score.
That's where you want to be.
But it's not the end all do all.
If you're under, though, don't say I'm not going to do this. Call me or call us, and we'll figure it out.
Yeah.
The value, right, or the costs of whatever your purchase price is plus the improvements can't exceed whatever the final value is.
Gotcha.
So to answer your question about how much can you do, there's going to be two values. They're going to give you an existing value and an after improved value. So and they come up with that after improved value by looking at the contractor's estimate, you have to give that to the appraiser.
Yep.
They're going to look at that estimate. They're going to say, okay, he's doing all this. He's putting an in-ground pool in. He's doing all this stuff.
This is what that value will.
This is what that value is going to be.
Future value, I guess.
Right. The future value, exactly.
Yep.
So, or as improved,
Yep.
And if our improvements exceed that value, they're going to make you pull it back. They're going to make you pull it back. But within that, you can put your appliances. You could put a pool.
Yep.
You can do anything. Fences.
That's good to know.
Yeah,
good to know,
so
because I was always under the impression that you couldn't do pools or anything like that, or appliances. So I just learned something.
And your down payment is based on the cost of your purchase price plus your improvements. The combined amount, you put 3.5% down with that amount.
Oh, wow.
So if you have a $100,000 purchase price and $100,000 in improvements, you're putting down $7,000.
Okay.
That's it.
That's nice.
So Yeah, so it's not a terrible amount of money out of pocket.
And the last question for this loan, is this a loan that you could use down payment assistance and closing cost assistance?
Can, absolutely.
Oh,
you got to have that little bit better credit score.
Yep.
620 really is where you want to be, for those. But Rhode Island Housing right now isn't doing a full K. They're only doing the streamlined Ks, but they're talking about coming back to the full Ks where they'll go over the 35,000. But right now they're within the 30,000.
Okay, good to know. But, that was another Bowtie Breakdown. I'm Garry Morin The BowTieGuy, and I was sitting here with Joe Baptista, who owns Anchor Financial, and he just went through the 203K Rehab loans for us. Thank you, Joe, for sharing that valuable information.
Thank you, Gary.
I appreciate it.
Yes.
We'll see you next time.